the mess, Jeep out of the jet. I'm about to catch, I double the bed. My money stretch from south to the west. Lawyers the best, get home with a check. He done fucked up, put some dough on his head. Can't be not done.
What's going on, y'all? It's Credit King DP, also known as Dixon Parker, man. We back with another video. Today we're going to be talking about business funding. A lot of people think business funding is just going into the bank and asking for a loan, which is honestly the hardest way to get capital. So today I'm going to be talking about the different options that you guys have. By the end of this video, y'all know, the best options for y'all, how to get business funding. Take it from somebody that's been doing this over 5 years. I've helped hundreds of business owners get access to capital, and there's so many different ways to go about it. Now the easiest way is going to be business credit cards, which we'll talk about, but you got business lines of credit, revenue-based funding, equipment financing, etc. So many different ways you can get capital for your business. But cool, man, like I said, we back with another video. I just got back from Cartagena. It was my birthday a couple days ago, man, and we back in the lab. Want to provide y'all the best value. So without further ado, let's get to it, man. Let's get into the action, baby. Let's break it down into two categories. One, you got revenue-based business funding, where they just look at the last 4 months of your bank statements. Your personal credit doesn't matter as much. They'll give you capital just based off that. Now, usually the interest rates aren't the best, with those type of loans, etc. But that's the option that you have. If your personal credit isn't the best and your business is making revenue, you could get capital just based off that. The second option is personal guarantor funding, where you as the business owner or owner of the business, is applying for that business, and you can get business credit cards, business lines of credit, equipment financing, etc., where you can get funding to get a truck, etc., for the company. A bunch of different options. So those are the main two categories you can get business funding with. Let's go into business credit cards, business lines of credit. Now, it all comes down to your personal credit. You want to have your personal credit in order, because if I'm a bank and you're coming to me and I see that you ran off on two banks, Chase and Bank of America 2 years ago, why would I give you $50,000? They're pretty much looking at your personal credit as a risk standpoint. So keep that in mind, guys, when you're applying for personal or business funding. The banks are looking at it as, can we trust him with this capital? Can we trust him with $20,000, $50,000? So that's something to keep in mind, guys. So with the business credit cards, they got some fire options. It's honestly the easiest type of business funding you can get. They literally just look at your personal credit and the type of industry your business is in. That's something to keep in mind, guys. If you got a high-risk business, it's going to be tough to get capital. You may want to get an H Corp or a separate LLC that you can get funding under. You want to have your LLC at least like 6 months to a year old. But if you got a trucking business or real estate company, it's going to be a lot harder to get capital from these banks, because those type of businesses fail all the time. But, these banks, they want to give out capital, but, they got to trust you. So when you're applying for this stuff, you want to look as trustworthy as possible on paper. So these business credit cards, they got 0% interest offers as well, where you can put that capital to work and not pay any interest on it for 12 months. Guys, the minimum payments are so low on these business credit cards. You can have it's 1% of the total balance. So you can have a $20K, balance on your credit card, and the minimum payments are $200. How crazy is that, guys? You could do a lot with that capital. So then you got the business lines of credit. They're pretty much like credit cards, but you could use that as capital without any cash advance fees, etc. You could literally just transfer the line of credit in your bank account and use it as you please. They usually have a bit of interest, but you can make like interest payments only. Interest only payments. So the minimum payments are still super low for most banks. So those are pretty fire. But with the business lines of credit, they usually want to see documents. They want to see tax returns, bank statements. Wells Fargo right now is one of the only banks that give business lines of credit without those requirements. These banks can change here and there, and, sometimes they'll be more lenient, sometimes they won't. So, you just got to know which banks, to go for. But, the main national banks like Chase, Bank of America, U.S. Bank, those are usually the banks you want to go for business credit, because, they're the most lenient. They have the less restrictions, and, a lot of them are giving out the bag. But it all comes down to having good personal credit and how you fill the applications out. For these business credit cards, they don't require any documents. So it's all stated income. They're not looking to see tax returns, bank statements. Like, you could apply today and get an approval the same day or next day. That's how easy it is to get business capital. But like I said, I've been doing this over 5 years now. When you have bank relationship managers, etc., that can leave notes to the underwriters, etc., it just helps you get the highest limit approvals. Because you could apply online and get 15K, or you can go through a bank rep and get 50K, because you're able to request limits from them. They know exactly what their underwriting team is looking for, etc. So it just helps, guys. But I would say one of the biggest mistakes most people make is they think their revenue is everything and they apply for the wrong products. They're going for business lines of credit, business credit cards with bad credit, thinking that their revenue is going to supplement. Like, oh, I got tax returns, so I should be able to get this credit card, but their personal credit is bad, so they're going to get auto decline. Another thing is they're applying for every bank in America. They're racking up these inquiries. Now you go on a chase with 5 inquiries in the last month. So now you look desperate. You know what I'm saying? And with these business credit cards, you can remove the inquiries after, because, they're not attached to any personal accounts. So the play is to go for a round of funding, do it strategically, know what banks pull, Experian, TransUnion, etc. Do it strategically. Then you wipe the inquiries. Then, a couple months later, you can go for another round of business funding. That's how you can maximize. But another mistake that people make is, applying with the high risk industry, applying to the wrong banks, and just not filling out the applications right. Like I said, you want to look at it from a trust standpoint. When you're applying to the bank, you want to look as trustworthy as possible. If you're putting 50K annual revenue, which may be the case, you can't expect to get, a 50K line of credit or credit card, because, if you're making 5K a month, for example, the banks aren't going to trust you with 50,000. So you got to be realistic, guys. And when you're applying, just look as best as possible. Another thing is they're rushing the business funding. Your personal credit may not be in position yet. You want to have a solid profile. I tell my clients it's like painting a picture. You want to build your personal credit up, paint the perfect picture to put it on the wall. So when you go for the business side, they're looking at this picture like, okay, he got, a 10K credit card. They're not maxed out, etc. He has the perfect profile. He looks trustworthy. We're going to give him, this bag. Another thing is, you want to make sure your personal credit cards aren't maxed out. You don't got big balances. Why? Because if you do, and you're applying for these cards, for one, your score is going to be a lot lower with maxed out cards. But for two, if you're applying for a business line of credit, business credit card, and you got maxed out cards, you just look desperate as well. Like, oh, he has this capital, but he can't pay it off, or he's just trying to make the minimum payments. Now he's coming to us to, get a little extra capital. So keep that in mind, guys. It's definitely something you want to avoid. In a play that I'm going to drop some game for y'all, man. If y'all got maxed out personal cards and that's the only thing holding y'all back, usually what we do for our clients is go for a personal loan to pay those cards down. Now your score shoots up, your utilization drops, and now you can apply for business funding 0%. You could take some of that 0% capital and pay that loan off. And that's a high level play that we do. If you got personal cards that's holding you back, that's maxed out, you could go for a personal loan. Couple other business funding options you got is like SBA funding, where Small Business Administration, where they usually want documents and stuff like that. It's backed by the government pretty much. That's another option you could do. They usually give out big bags, but it's a lot lengthy application process. But if you got everything in order, you can get a bag from the SBA. You also got like invoice financing, where they look at all your future invoices, the clients that owe you, etc. They can give you lending based off that. The equipment-based financing, that's pretty much, they're going to look at like the invoice of the truck or whatever equipment that you need. They're going to, ask like what you're using it for. They're going to look at documents 9 times out of 10. But we've gotten plenty of people approved for equipment-based financing. They just needed to provide like the invoice for the equipment to see exactly how much it costs. Some of them we've even gotten with no docs, like no tax returns and stuff. So that's good. If you're looking to use that financing for a vehicle, it may be easier, instead of going for a loan or credit cards, to just go for equipment, loan or equipment financing, where they take that capital, use it to, pay that invoice to get that equipment. So when you're going for business funding, you want to have a plan as well. One of the biggest mistakes people make is they get this capital, they don't have a clear action plan. So they take this capital, now they're just scrambling, and they're also wasting the 12 months of 0%. When you get that capital, you want to have a clear action, what you're going to use it for, etc. Don't make the mistake of just throwing the money in the wind or just sitting on it when you got it. You know what I'm saying? That way, you taking advantage of the 0%. And you put in that money to work, and you're making that money make money for you. But yeah, I would say if I was starting from scratch, one thing I would focus on is building my personal credit out the right way. Making sure I got some comparable credit. You want to have at least like one 10K credit card at minimum, one 5K credit card. So when you apply for the business side, they see you got some decent limits and they're willing to give you a bit more. If you got a 10K limit, they're going to be willing to give you a 30K, 40K limit. If your highest personal credit card is $3,000, it's going to be hard for a bank to give you 25, 30K because they don't know if you can handle that much capital. So if I'm starting from scratch, I'm making sure I'm building my personal credit the right way. You want to have at least like 5 personal accounts. You got a thick profile, some good comparables. Also, when you're applying for business funding, make sure you don't got a bunch of new accounts on your personal credit. Because in the bank size, like I said, from a risk standpoint, if they see you got a bunch of brand new accounts, they're going to see, oh, he just got 30K on his personal side. Why should we give him more capital? He just got capital 2 months ago. So the rule of thumb is making sure all your accounts are at least 6 months old before going for business funding, especially business credit cards, business lines of credit, because they definitely take an account of that. And just the increase, you don't want to have a bunch of increase when you're, applying for business funding. Another thing to keep in mind is the time in business. If your LLC is brand new, you're going to look like a startup, and the banks are going to look at that as more risky. He doesn't have history on his belt. If they look at you like you just started the business yesterday, it's kind of just like we be giving you money just to try shit, to try stuff. Excuse my language, but yeah, so keep that in mind, guys. The time in business matters. We usually provide age course for our clients for those with high-risk industries or like, not a lot of time in business because it definitely plays a factor. So keep that in mind, guys. When you're going for business funding, they also want to see you have a relationship with a bank. I always tell my clients it's better to apply as a friend than a stranger. If you're applying to a bank for their business line of credit or business credit card, and they don't have you in their system, you just applying as an outsider, they may approve you because your credit is good, but that's all they can base it off of. Whereas if you have a business checking account with them, a business savings account, you making deposits every month, they see your spending behavior, they see your deposit behavior, they're going to give you the bag because not only do they see you got good credit, but they see you depositing every month. They're familiar with you, you're in their system, you've been in their system. The rule of thumb, I usually say, 30 days is the best, but as long as you got a relationship with them, even if you apply like a week later, it's better than not having a relationship. But, if you're prepping for a business funding sequence, 6 months from now, you're getting your credit back in shape, whatever the case may be. The best rule of thumb is, start creating these relationships now. Plan out what banks you want to go for, and then, get a business checking account with them. Make some deposits here and there. And that way, when you apply 6 months later, now you had a relationship with them for a long time. You're not a stranger. They're going to be more willing to give you that back. So keep that in mind. Business relationship, your personal credit, and how you fill out the application. Those are going to be the main factors on getting you that back. And the best part about the business funding is it doesn't report to your personal credit. So you can have 5 new business credit cards and it won't affect your personal credit. So you could wipe the inquiries and a month later you can go for more business funding. How crazy is that, guys? So you can max out these business credit cards. You're investing, you're putting the money to work, and you can go to another bank and get more capital because they can't see, that on your personal credit. So they're not really judging you based off that. So that's how the business funding works, guys. Like I said, I've been doing this for years and it's a game changer, but you want to do it the right way. But yeah, man, I just wanted to make this video to kind of go over like the different types of business funding and what you really need to focus on. If this video helped you understand funding a little more, give myself a subscribe, man. I'm going to be dropping bi-weekly, different credit game, travel hacks, and updating y'all on my own finances, road to $1 million coming soon, man. So stay tuned, baby. And if you guys need help, drop your questions or suggestions in the comment section, and I'll definitely reply. Let's go, baby.